In the darkest corridors of the financial world, at those critical turning points where everyone looks in the same direction and believes in the same story as if hypnotized, there are very few individuals who can listen not to the noise of the crowd, but to the cold and silent scream of the data. Michael Burry is not just a representative of this minority, he is its most extreme and disciplined example. Today, we will take a journey into the depths of his mind, into a thought system that goes beyond his famous The Big Short success. Michael Burry is not merely a prophet who foresaw the 2008 financial crisis. He is a true system architect who blends technical analysis, fundamental analysis, and market psychology into a hierarchy never seen before. For most traders, technical analysis is a mechanism that generates buy-sell signals and makes decisions on their behalf. However, in Burry's world, technical analysis has never been and will never be a primary decision-making mechanism. To fully grasp his system, one must understand the unshakable hierarchy within his financial universe. The first step of this hierarchy is finding the naked and true value of an asset. In other words, you must first lay a rock-solid fundamental foundation. In the second step, you measure how much the market has deviated from this reality and how sustainable that error is. And only finally, if all the pieces have fallen into place, do you look at price action, the world everyone talks about, solely to optimize timing and the entry point. For Burry, charts are not a reason to enter a trade. They are merely a timing tool that determines the opening kickoff of that trade. This is a distinction that is often confused in the modern technical analysis world but is of vital importance. As he has emphasized repeatedly in his old writings, blog posts, and investor letters, even if a stock or asset looks technically weak, the trend is downward, and all classic indicators are screaming, sell. Burry will never close that position if the fundamental data, the fundamental structure, remains solid. Technical analysis cannot push him out of a trade because he believes not in the short-term irrationality of price, but in the long-term and inevitable gravity of value. In Burry's mind, the market is a ball of emotion that has completely spiraled out of control in the short term. According to him, trend is often nothing more than a reflection of herd mentality and uncontrolled crowd behavior on a chart. Momentum is usually a passing wind created by a hollow story. This is the primary reason he does not place classic technical analysis tools like RSI, MACD, or Bollinger Bands at the center of his system. He knows very well that these tools are mathematical derivatives of past price action and lack the ability to reflect future intrinsic value. So, what allows this man to see so sharply? Burry's medical background adds a surgeon's precision and a diagnostician's composure to his financial analyses. During the years he practiced as a doctor at Stanford, staying awake at night to examine corporate balance sheets instilled in him an obsessive devotion to data. Diagnosing a patient by looking at symptoms and predicting a crash by looking at market symptoms are essentially the same processes in his mind. When the market misprices an asset, Burry sees a disease there and profits from the recovery process of that disease. His greatest edge, his biggest advantage over his competitors, is his ability to maintain a position even in moments of technical weakness, and even to see this weakness as an opportunity to increase his position. An ordinary trader flees in panic when the price breaks a major support level or when a trend reversal pattern forms. For Burry, a drop in price means that if his fundamental thesis is still valid, the market's error is growing and thus the potential profit margin is expanding. We witnessed this approach in its purest form during the 2008 mortgage crisis. When he bet against the housing market, the market moved in the exact opposite direction for months. His investors wanted their money back. Banks laughed at him, and technically every chart was screaming that he was wrong, but he saw the credit packages behind the charts, the statistics of unpaid debts, and the rottenness of the system. For him, data is always more sacred and more real than candlestick charts. However, it must be noted that Burry does not reject technical analysis entirely. On the contrary, he uses it skillfully as a behavioral reading tool. He views volatility in price not as a risk, but as a tool for efficiency. He knows that during periods of increased volatility, the psychological limits of market participants are being tested. This is where technical analysis comes in. Is there panic, or is euphoria being experienced? Price action gives him the emotional pulse of the market. For example, when an asset enters an oversold zone, Burry does not simply say, RSI dropped, I should buy, like a classic indicator follower. He asks, why is the market so afraid, and does this fear align with the fundamental value? If the fear is groundless, the weakness shown by technical analysis becomes the safest entry gate for Burry. His entire strategy is built on mispricing. Finding a massive error that everyone accepts as true, a systemic blindness, is his area of expertise. Today, the same logic applies to his positions against the AI bubble or overvalued technology companies. The more the disconnect between value and price increases, the more Burry's appetite grows. The most dominant trait in Burry's investor character is conviction, unwavering belief. This is not a blind faith. It is a mathematical certainty filtered through thousands of pages of data. Therefore, patience is the most critical gear in his system. After opening a trade, he can wait for years for the market to prove him right. He learned from Benjamin Graham that in the short run, the market is a voting machine, but in the long run, it is a weighing machine. This is exactly where most traders lose, failing to have the massive mental strength to trust the fundamental data saying hold when the chart says sell. Burry always keeps his portfolio concentrated. Instead of diversifying across dozens of different stocks, he focuses on a few large positions he truly believes in and has analyzed deeply. If he has caught an edge, he uses it to the fullest. This approach is not limited to company analysis. It also covers macroeconomic balances. Investing in water resources or focusing on agricultural land is the result of reading resource crises and supply-demand imbalances across the globe through a global projection, rather than a technical chart. As reflected in the film The Big Short, Burry is a mind that enjoys being alone. His diagnosis of Asperger's syndrome has turned into an advantage that allows him to isolate himself from social noise and focus solely on data. He does not care what people say, what commentators on TV explain, or the hype waves on social media. For him, reality is hidden only in the raw data on the computer screen and in the footnotes of balance sheets. This isolation gives him the power to be a contrarian, an investor who moves against the crowd. But he does not move against it just for the sake of being contrary. He first analyzes the consensus, finds the weak point, verifies the data, and only then takes a position. This process transforms him from a random gambler into a strategic genius. In today's markets, in an environment dominated by high-frequency trading and algorithms, Burry's approach is more valuable than ever. He reminds us that price is the latest and least important piece of information in the market. What matters is why that price is there. Technical analysis can turn into the art of making up a story by looking at the price. However, for Burry, this art is merely a pen used to underline the facts. If the intrinsic value of an asset is $100 and the market has driven it down to $50 with a technical collapse, Burry does not listen to the technical analysis warnings that the decline will continue. He takes the fundamental analysis signal that this is a bargain. This discipline requires immense patience and nerves of steel. Being able to maintain a position when the market goes 20 or 30% against you and everyone tells you you are wrong is not just an investment strategy. It is a matter of character. Michael Burry is much more than a trader. He is actually a system critic. His success lies in his ability to transform market inefficiencies and people's emotional weaknesses into a mathematical advantage. Using technical analysis not as a decision maker, but as a validator has made him one of the greatest winners in financial history. For an investor who wants to follow in his footsteps, the lesson is very clear. See beyond the chart, dive into the data, and silence the whispers of the crowd. Success lies not in using the fastest indicator, but in performing the most accurate analysis and showing the courage to stand behind that analysis. Because at the end of the day, the market is nothing more than a massive mechanism that transfers money from the impatient to the patient. Burry is one of those who best deciphered how this mechanism works, and his story carries a much deeper meaning than those colored lines on the charts. He is the victory of a mind that pursues the truth and does not hesitate to take on the whole world when he finds it. In the market, everyone wants to be right, but very few can tolerate appearing wrong. Burry is a legend today because he dared to appear wrong until he was proven right. As we approach the conclusion, one must not forget that financial markets are a battlefield, and in this field, your greatest enemy is not the trader on the other side, but your own reflection in the mirror. Michael Burry is someone who has won this internal war. Using technical analysis as an engineering discipline, stripped of emotions, is the primary element that makes him invincible. If you ever find yourself looking at a chart and hoping that it must turn from here, remember Burry's approach. Hope is not a strategy. Data and value are unshakable truths. If you want to survive in the market, focus on price. But if you want to build wealth, you must focus on value. Michael Burry's path is a difficult, lonely, and patient one. But the greatest rewards in history have always been reserved for those who can walk this path. To win while everyone else is losing requires staying awake while everyone else is asleep. And sometimes, the greatest technical analysis signal is the very moment when the whole world is wrong. Love the data, learn patience, and become deep enough to trust your own analysis. Because standing in the right place in the market sometimes means standing all by yourself. Thank you for listening. See you in the next episode.